Oil prices, Brent crude oil is trading at about $87.50. Interestingly, that's $3 down from the weekend since the big events, but also exactly right back to where we were on April 1st when Israel destroyed part of the Iranian consulate in Damascus, killing a number of their senior military leaders, which sort of triggered this latest round of events. Omar Ubaidli, Director of Research, Bahrain Center for Strategic Studies, International and Energy Studies. As you're the one in the middle of it all, literally and metaphorically, where do we go from here? Are we closer to a regional ceasefire or a regional war?
So I think that the way in which the different parties have behaved recently suggests that nominally we're closer to a regional ceasefire in the sense that all sides have indicated they don't want a significant escalation. However, the problem is that there are many wars in history that have started accidentally, because if you put enough troops on borders, then a missile is going to accidentally run in the wrong place, it's going to kill a lot of people, and then there'll be pressure to retaliate and so on and so forth. And even today, I believe there's been more continuing skirmishes on the Lebanese-Israeli border, and Israel is still unable to achieve its stated goals in Gaza, and is still encountering military resistance in Gaza. And then obviously we still have the continuing escalations and interruptions to trade around the Straits of Hormuz and Bab el-Mandeb. So in the grand scheme of things, I'm afraid we are significantly closer to a regional war, just because with this many military pieces close to each other, and a lack of dialogue between the relevant parties. And now, as you probably saw in the newspapers, Qatar is being, castigated as a mediator, which creates, which gets rid of another potential, avenue of de-escalation. So, in answer to your question, I think nominally we're closer to regional peace, but fundamentally we're closer to a regional war.
I'm not sure what that means exactly, but Vanda Nahari, either way, founder and CEO of Vanda Insights, the oil markets appear to be completely undisturbed by these events that Omar has just outlined. Your thoughts on the fundamentals in this oil market, which are trading down from the highs that we saw last week?
Good morning, Sean. So, crude, as you mentioned, has pretty much surrendered all the risk premium that had crept in following the April 1 attack on the Iranian consulate. I am somewhat surprised because even though the hope for Israel not retaliating has been slowly growing pretty much since Monday, I would have normally expected crude to not pull back all the risk premium in one go. So that essentially what that means is I think there is a risk still that it turns out that the market has prematurely discounted the risk, as Omar mentions. An accident is all you need. But so where that leaves us, I think, is still there is a risk premium on account of the festering war in Gaza. So Omar mentioned that there is a Middle East ceasefire, but there is no ceasefire in Gaza. I think it'll be good for us to remind ourselves of that. In fact, all the parties remain as far as possible from a ceasefire and hostage deal. So I think attention will shift back to that. And another festering war in Ukraine. And, let's not forget that has also injected a fair amount of risk premium in crude. So I don't see a substantial continued pullback in prices from here.
Mark Ostwald, good morning to you, and thank you for coming back to us, Chief Economist and Global Strategist at ADM Investor Services International. Mark, I'm kind of tempted to sort of pull back the lens a bit on time and framing, in essence, back to the halcyon days of pre-October 7th, and also in that sort of interim 6 months period pre-October, if you like, the global financial markets were in a much more sober place, right? We've gone through 6 months of a real bull run on all financial risk assets, and oil has kind of, tapered along and incrementally climbed up its own sort of increase, but nothing dramatic, nothing like the financial markets as a whole. As we sort of come out of this, or are we coming out of that 6 month sort of bull run in which interest rates were going to be cut and everything was going to be perfect? We're going to be absolutely loaded on our pension funds and the stock market, and we're going to have low interest rates, and the world would be perfect. Just pulling back from that, like that big picture piece as to where sort of, because fundamentally, of course, that underpins the oil markets. Where's the big picture of the global economy at the moment as we sort of sober up on the financial markets and oil remains relatively unperturbed?
I think in terms of the global economy, we are in a better place than we were 6 months ago. There is a lot more optimism out there. It is still very much, the picture is very uneven. Europe, UK, still the prospects are slightly better than they were, but if we weren't just moving around zero and say the difference, we were back in September and talking about 0.2% and we're now 0.6%, we probably wouldn't be getting as excited as, oh, well, we're not going into recession and it is a bit of a recovery. At the end of the day, it's very marginal. China, on the other hand, we had the GDP numbers, but the key aspect there was really just how much momentum was lost in the third month of the first quarter. And what you're seeing, particularly in sectors which are struggling in China, is a rapid buildup of inventories, which is now creating some inventory shedding. And so the primary concern, I think, for commodity markets and indeed energy markets above all, is, has Chinese demand plateaued now that they're actually getting to levels in terms of their inventories of raw materials, which are more than in excess of what they need. But on the other hand, we have the US economy, which continues to grow great guns. The only problem I have with the US economy is this is really a debt-fueled economy, particularly US government debt. So we're in a situation where I think the bigger picture is the demand for raw materials, be that energy or be it other raw materials. We're still trying to find where our natural position is, because we're not where we were pre-pandemic. We are in the process of the energy transition. What we actually need in terms of the energy transition, what will win out in terms of energy sources, is still way up in the air. No one can predict it. Even the technology it hasn't really bedded down to a level where one can start making forward projections. So we're in a volatile environment. But I think overall, we got too excited about the prospects for interest rate cuts. Nevertheless, we have this divergence now, and I think it's an important one, whereby Europe, UK, China definitely, the inflation pressures basically have largely dissipated. The US, those inflation pressures are very much there, and it is very much driven by that demand-driven, the debt-driven growth in the economy.
Omar, I'm thinking about what's at stake here as the Israeli government consider their next move in this fairly tumultuous chess game, if you like, with dire consequences, obviously. But ultimately, where is the consideration? I mean, going back again, sort of this idea of pre-October 7th, pre-October in this equation, the halcyon days in which the Saudi and Iran had rapprochement, the Israelis and the Saudis and the Americans seem to be doing some kind of a deal together. And we obviously had the Abraham Accords in the recent years. I'm wondering where they come into consideration. Clearly, if the Israeli government retaliates against Iran, most analysis would be that, in your earlier comments, puts us closer to a regional war, which we've obviously been trying to avoid for some months now. But my question ultimately is, how much is in the thinking for Israel the relationships that it has built up in the Middle East in recent years and was pre-October 7th looking like moving further in their direction? How much is that at stake, do you think, in their consideration? Should it be, where do you see all of that in its in the influence of direction of travel?
So I think it's important to draw a distinction between what this Israeli government collectively and society collectively seeks and what Netanyahu and his clique are seeking. Let's take the first part, which is what Israeli society and the government is thinking. They have a moment what appears to be an intractable problem, which is that the settlements around Gaza and the settlements around southern Lebanon are still not resettled. You know, the people who live there, the Israelis who live there, are still living to a significant degree in hotels and unable to resume their normal lives. And so they have a proximate problem which dominates the kind of or supersedes the issues you discussed, which is how do we get these people, how do we create a condition where these people can go back to their homes? And in terms of the regional dialogues, the problem for Israel is that a precondition for countries like Saudi Arabia and the other ones that are under consideration, seemingly a precondition for the kind of dialogues you're describing are issues that are incompatible with the return of these Israelis to those settlements. So at the moment, Israel is putting those things on the back burner and focusing on some sort of military conquest or victory that will allow those people to go back, and then it can go back to the bargaining table potentially with a stronger hand. That's how it perceives it. But in the middle of all that, you have Netanyahu, who is has been described as this sort of Teflon politician, trying for the umpteenth time to cling to power using any means available. And in this regard,
times he's been in power for 30 years on and off. But I mean, this guy is more than. I mean, I think we have to be cautious too in the analysis that Netanyahu is not Israel and Israel is not Netanyahu. They've elected him for 30 years. I mean, let's wake up and smell the coffee here. They like the guy.
I think there was very clear that there was a lot of political unrest, domestic political unrest in the last 5 years in Israel surrounding Netanyahu and the alternatives, culminating in very extended periods of protests prior to October 7th, and even continuing now, although they don't seem to get much media attention. So yes, I agree that Netanyahu may be the closest thing to the preferred politician of Israeli society, but at the moment, nobody can claim in Israel to be, having a particularly strong mandate, Netanyahu or otherwise, and that's very clear from the domestic political scene. So his his machinations or his steadfast refusal to relinquish power and his willingness to undertake very radical and escalatory actions in order to maintain power is affecting this dynamic. And so
how would you think? The reason I'm sort of triggered into this question to you, obviously your regional expertise, but particularly on the back of this joint statement yesterday by Saudi Arabia and the UAE calling for regional calm, if you like, basically reminding the Israelis what's at stake here if they cross this line. Your interpretation of that statement yesterday?
So, I mean, look, any regional conflict, the biggest losers are the Gulf countries at the sort of geostrategic level. Obviously, the people who die are the most directly affected. But if there's at the geostrategic level, any regional conflict, the Gulf countries. So Saudi Arabia and UAE, with that statement, do two things. First of all, is that there's the carrot of, remember, if you can de-escalate, you can be friends with us, and there's lots of money on the table. Don't forget this. And I think there's also partially a carrot in there, a stick partially in there. Obviously, the Saudi Arabian UAE don't have strong ability to influence to sort of hold Israel accountable, but they do have influence over America. And when you marry what the UAE and Saudi Arabia is saying with the pretty strong statements from the US regarding that it's not going to be part of any retaliatory effort, and the election hanging over everyone's heads in the US, I think it's part of the messaging and telling both Israeli society and Netanyahu at the same time, let's pipe this down. Let's remember that there's everybody can be very rich if everybody can learn to coexist.
Bandana Harry, certainly $90 oil or 87 or thereabouts is very good news. Just putting everything else aside, from an oil producer's point of view, this is the honey spot for oil prices, 85 to 90. They're pretty happy. Your thoughts on where the supply side of this story is? We talked a bit about demand earlier, US economy, etc. But where's the supply side? Venezuela looks like they're going to be knocked back down again from the sanctions. Your thoughts on the outlook for supply?
Yeah, interesting you mentioned Venezuela. So Venezuela and Iran, and particularly US sanctions on these two countries, have been much in the news over the past few days. The market appears to have shrugged off US not renewing the suspension of Venezuelan sanctions. If you look at the actual impact in terms of Venezuelan supply into the global market, it was about 100,000 barrels per day, give or take. So Venezuela went from about 700,000 to 800,000 barrels per day. And perhaps had it continued the suspension, perhaps it could have gone up another 100, at the most another 200,000 barrels per day. So it's a drop in the bucket for the market. So it's not really impacting supply. I think the bigger impact is going to be on, of course, American companies. Chevron, we know that Chevron was very keen to continue working, and it will continue as it happens. It's only the General License 44 which is being rolled back, and Chevron's operations in the country, Chevron's ability to bring crude back into the US, importantly, has not been affected. I do feel that the provision that the Treasury has given, that it will allow companies to continue applying to do business in Venezuela, to do trade with Venezuela, and will decide on could give an exemption on a case-by-case basis. I think that's quite interesting to my mind. It could be designed to ensure that US refiners continue to have access to Venezuelan heavy crude. I think that has been a big relief valve for them. It's going to be an increasingly important relief valve because the Dos Bocas refinery in Mexico is starting up, so that's going to reduce heavy crude supplies. And of course, we have the Trans Mountain expansion, bringing more Canadian heavy oil to these parts, actually, to Asia. So we could see that as far as the impact on US refiners is concerned, it will be contained. I think it's also interesting that the US seems to have pulled back from talking about, let alone contemplating further oil sanctions against Iran because of all that's happened over the past 2 weeks. They are now looking at sanctioning Iran's missile and drone program. So it does
but it's
look
one
like...
thing, I mean, the sanctions department in the US government must be, but it's supposed to be growing. I mean, maybe that's what's creating the employment numbers, because everybody's being sanctioned. It's like, maybe that's one reason to give up the Venezuelan ones, because we just run out of sanctioned manpower. I think they've all become a bit of in a way, the sum of the parts is they're just a noisy distraction, but actually there's not a lot of teeth in those. Mark, what is also we're waiting for this week is the sort of waiting for Godot week in a way. Finally, are we close to the US, the Congress signing up to more funding for Ukraine? It seems that we're close to that, but still not there. Your thoughts on that happening, what that means for Ukraine, what that means for the war in Ukraine against Russia's invasion? Because of course we've seen in recent weeks that the Ukrainians have resorted to drone attacks on the Russian refineries, which has been quite impactful, low-cost warfare. But if you're down to your last dollar, you're going to resort to what you have. So what are your thoughts on this funding going through the Congress and what it would mean for this conflict?
Well, hopefully they will get there because, as everyone has made very clear, without that funding from the US, the Ukraine is in a fairly hopeless situation. That's the reality of it. They are outmanned, outgunned, everything. So it would make a difference. It would probably, I think, for most, in my view, mean an even more protracted war. And but it also highlights, we've been very focused, I think, in terms of financial markets on what's going to happen with interest rates. I can't help but feel that this heavily divided US political scene is something which we're going to have to focus on a lot more as the year goes on. So if this gets, assuming these bills get passed, that is, good news for Ukraine. I'm not sure to the extent to which it impacts Israel and what it does. I think that's more strategic. But it still means this goes on. And Europe,
does it mean, do you think, that Ukraine pulls back from this strategy of drone warfare against Russian energy infrastructure, which I know its Western backers are not keen on?
To a certain extent, but on the other hand, it will probably be thinking, well, this was so difficult to get this funding. On the one hand, there's a consideration of what demands are being made of them from the West. On the other hand, basically saving their pennies so that they can continue to defend themselves in a much more sustainable manner. So they're going to be probably rethinking their strategy overall from last year's failed frontline assault to try and recapture territory, and thinking just how what do we need and what sort of timelines do we need to think about in terms of our defense, and the best way of utilizing the resources that we're getting from the EU and from the US. So that there is something there, but obviously the political equation with the EU elections coming up and the US elections late in the year is also going to be a very big consideration for them, because they don't know how much support, how long support will be maintained.
Let's go to the survey question and see where we're at in this wider question I put to Omar. Are we closer to a regional war or to a regional ceasefire, including Gaza? Oil prices have fallen $3 since Iran targeted Israel and back to where they were when Israel targeted Iran's embassy consulate in Syria. But are we close, or what is most likely next to happen? What is most likely to happen next? A regional war or a regional ceasefire, including Gaza? I know what we would all like to see happen. And we're kind of all waiting to see what the Israeli government decides, if indeed retaliation and the scale of it is on the cards. Given Netanyahu's behavior of the last 6 months, you'd have to say that's more likely than not. He hasn't been listening very much to his Western backers. Will he listen on this occasion? Are we closer to a regional ceasefire, which has been in the kitchen of discussion for weeks on weeks now? And we saw, as Omar pointed out, that the Qataris are getting increasingly very frustrated with that process and their role within it. And if they were to withdraw from that sort of arbiter role, then that could not be a good thing. So anyway, that's the question. What is most likely to happen? Regional war, regional ceasefire. Omar, given where this oil market's been at, and we've talked about it for some time now, that the stakeholders to the market, whether they be fund managers or physical traders and so forth, are not going to sort of advance this oil price in any significant way in terms of geopolitical risk until supply actually gets disrupted, rather than the possibility of it being disrupted, which is where we've been at for some time, because of course none of it has. Are we at a different point now if we go down the likelihood of regional conflict? I mean, we've had regional conflicts in the past here, and clearly, both disruptions have happened and disruptions haven't happened. Is this one where we're not quite betting in the what's at stake here, or could we have a conflict, an escalation at least, next step being an escalation where again supply is not disrupted?
No, I think that the risk of supply disruptions is actually very large because of Bab el-Mandeb and the Straits of Hormuz. If Iran wants to, and its proxies and allies and partners want to exert considerable pressure on external parties and internal parties in the region, then the give me is to escalate in Bab el-Mandeb and the Straits of Hormuz. There's nothing Israel can do about that. The US is already pretty close to being maxed out in both areas, and you saw with the Iran symbolic, but that's certainly indicative boarding of a vessel. I believe it was last week, an Israeli affiliated. I think it's quite hazy, but I mean, and that was a very low tech operation, and scaling that is trivial. So the option is there. Iran has made that, has signaled that the existence of that option very clearly to all different parties. Really, I think the wild card here is how China would respond, because obviously China wouldn't be happy about this that kind of escalation. But by the same token, I think China would be sympathetic to Iran, being angry about its consulate being struck and other such acts of aggression, and the pressure would be turned back on towards Israel and its Western backers. So really, I think what we've seen, the lesson from the regional conflict is that we've seen thus far is that it can happen without threats to oil supplies, which is why the oil supply, the premium hasn't risen so far. But at any point, Iran and its partners have the option of making a major disruption to oil supply routes, which would then lead to a rocketing of the price at a moment's notice.
Vanda, I wanted to get your thoughts on the Indian election, which of course is just about to kick off, and you are obviously from India, and I presume will be voting. But how big of it? I mean, it's a pretty much a done deal that Narendra Modi is going to win. It's just a matter of how big of a win, really. Your thoughts on is this something we should be paying attention to? Are there consequences of a big win for Modi that might make a win even more meaningful? Your thoughts on the next month and the outcome and its consequences?
So certainly it'll be something to keep an eye on, but I would say that it's in a good way that it should, I think, bring some relief in this period of immense turbulence. I think if there's one pocket of certainty in a major democracy that is going into elections this year, it's India. So yes, I mean, that is the expectation. Narendra Modi will come back with a good, strong majority as well.
Which allows him to do things that he hasn't yet been able to do, right? I mean, in terms of a super majority.
Well, he's done a lot already. And in fact, that's the reason the electorate wants to bring him back, because they have seen and very tangible signs and evidence of everything that he has done, and especially in terms of infrastructure. So the
apparently he's going after the with a super majority he could tackle the very difficult bureaucracy of India, the civil servant bureaucracy that maybe the muscle of a super majority would allow him.
So I'm not an India political expert, but it's not so much the bureaucrats as the red tape that to some extent that India has inherited from the colonial past and unfortunately has actually boosted it over the years. And I don't know why, but that's how it's been. So it's really the red tape, and cutting the red tape, it takes more than just a political majority to do it. It's just something that will take lots of patience and lots of time.
Mark, last word to you on this. One of the questions we still linger with, so regional war is tipping regional ceasefire in this room, and we'll post that on social, but how good a story is China at the moment? I mean, first quarter pretty solid GDP numbers if we're sort of take them at face value. Oil imports pretty solid, 11 whatever million barrels a day imports and so forth. How do you read the Chinese economy now, 4 months into the year, as being an engine of marginal demand growth in 2024, or not?
Well, I think the pessimism that was there at the start of the year has dissipated somewhat. But it's a very, very uneven economy. I think that this is really what we saw the other day, particularly in terms of the industrial production numbers. What you're doing is saying, right, cement production was down 22% year on year, crude steel down 7%. On the other hand, aluminium is up 10%. So it basically tells you that anything related to the property sector, real estate, which remains the Achilles heel of the economy, is weak. The measures that they've taken actually haven't really had that much impact, and confidence is low. On the other hand, the energy transition is and the high-tech sector is such a huge driver of the economy that a lot of anything related to that. So I think in terms of where China actually impacts the global economy and the global demand for raw materials is you really need to look at it on a sector by sector basis. You can't just have a wholesale, oh, China's going to be stronger than expected, because it is a far more subtle situation. But I think on balance, I still think it's probably going to be slightly better than most people anticipate, simply because they have that huge lead in the energy transition sector and the demand for energy transition goods.
And that's kind of my trigger of my thoughts and question to you on it, is that the second half of the year is lining up to be quite tight at current supply levels if OPEC Plus was not to start to unravel some of its cuts. And that's obviously going to be the big question next. What are the tea leaves saying for OPEC Plus on the supply side? Can they, but under 90, unlikely. Over 90, we could possibly see it. For now, we have to leave it there. Oil prices on Brent trading 87.50, down $3 this week. Will it continue? We've got to go into our back garden and continue bucketing out the water from our flooding. So we will leave it at that. Omar Ubaidli, as always, really great to have your insights every week, and especially this one. Mark Oswald as well. Thank you from London. And Vandana Hari, of course, as always, founder and CEO of Vanda Insights in Singapore. Nobody better than Vandana. Thank you so much for your insights today. All the best.
Thank you.
Thank you.